quick live session as we do every morning, just to have a look at the markets and get some potential trading ideas out there using those very simple strategies that actually get results. So let's run into it. We're going to start with the futures market, head over to the Forex market, crypto, and then we'll have a look at some of the automated systems that I've been messing around with here lately, and then we'll let you go. My goal always is to keep it about 15 minutes, but I always need to go 20. So let's see how we do today, if we can keep it on the low end or if we're going to be towards that normal high end. We'll certainly see in just a moment. So let's kick it off. Oh man, I don't have my screens up. Let's see if I can get my screen share going here. I need to add this one and this one. All right, if we add those in, now we can see what's happening. So we'll start over here in the futures market, and we'll begin by having a look at what's happening with the E-minis. Yesterday, let's just scroll out to a 4-hour over here. So the trend is still up. We had a big move yesterday back down. So we seem to have topped out this 33.88, 33.90 area. Seems to be really holding up as a resistance point up here. Hit it the other day, moved down. This was a holiday day, by the way, Monday. So Tuesday it moved down, came back to test it Wednesday, and then Thursday in regular trading it just repelled off of that and moved straight down. Blew right through our first line of support, which was 33.64, 33.65 area right here. Blew right through it, didn't even look back. It's like it just cut through it like butter. So, if you were looking to buy off of this, which is what we were talking about yesterday, that first opportunity, boom, stopped out. Moved down to 33.50, and at this point would have had a couple opportunities to buy off of 33.50. So it broke below it, couldn't close below, came back, retested it a couple of times, and then has moved back up. Where we are right now, we've got a 30-minute trend and a 4-hour trend that are mixed, right? Our longer term trend is still showing us that we have long opportunity here. Our 30-minute trend has turned over. What does that mean to us? Well, it means a couple of things. If you don't like trading when the trends are against one another, you can just simply not trade. That's a viable option to sit it out. Sometimes it's a much more profitable option to sit it out. Next would be continue to base our trading decisions off of that longer term trend. The longer term trend is still up. So, looking for pullbacks to 33.50, which is what we've seen here as the bottom edge. It's held up really well under some heavy selling yesterday. It held up, and it's been retested a couple of times over the course of the off trading hours. And, we'll see where that goes. So looking at 33.50 as a potential point to buy is still trading with that longer term trend. The flip side of that is, we're in between this 33.64 and 33.50 area. The flip side of that would just be to simply wait, be patient, and watch for breakouts and see if we get a break above 33.65, and if we do, we could buy off of that. And if it breaks down below 33.50, then we could sell off of that. So there's a couple of ways to go there. And obviously the intraday method is to simply watch what's happening around each of these levels, see if we can close above. So if we break above 33.64, close above 33.64, then we could look to buy that on a retest of that area. If we break below 33.50, close below it, then we could look to sell that on a retest of that area. Just be aware right now, selling, even though the intraday bias, the 30-minute bias is down, our longer term is still up. So, trading with that longer term trend, take a breath, be patient, don't get too caught up in what's happening here. Trading with that longer term trend, we would still be looking at buying opportunities until that turns over and gives us that selling opportunity. Now, why? Everyone, why did this do this yesterday? Because it did. Everyone's going to have a story. Everyone's going to have a story about what happened here and what caused this selling. At the end of the day, it just comes down to supply and demand. Is what caused it. What's the catalyst behind it? I don't know. could be that manufacturing and distribution woes are finally catching up, and markets are coming into realization that while the coronavirus seems to start being contained at some level, did have a big impact in China, and there's a lot of goods that aren't coming out that are needed to do everyday work, and that's slowing things down. Maybe there's a realization around that. I don't know. Everyone's going to have a story, right? Reality is everyone has their own story of what happened here, and they're going to justify it in some way. The less we worry about that, which I know is human nature, we want to always know why something happened. The reality is it happened, but all we can really do is try to trade by what we're seeing here on the charts and make those impartial, unbiased decisions, trading with whatever our plan tells us. And I gave you a couple of different ways to look at the plan today. So, you have to find the one that fits you and then execute that consistently. But here the trend is still up, but we need to watch and see what happens around these key levels as we move to these on an intraday basis. So we'll see what goes on there. Big things, watch 3364, 3365 area and 3350 and see how we close around these. Right now we're in no man's land. We're in between two key levels, so don't get too caught up in that and want to place a trade right this minute. We still have another hour before the regular market session begins anyway, right? But don't try to place a trade this minute. And if you go long off of this right now, and it pulls back, you'll be wishing you just waited for it to get down to 33.50. And if you're going short off of 33.65 or whatever it might be, if that's in your plan, and you do it now and it pulls back, the whole time it's pulling back, you'll be wishing that you waited. So just wait for key levels. Try to be patient, wait for key levels. See what price does around that key level, and then take your action. So again, gave you some ideas, some things that you can do around these key levels here on an intraday basis. What's happening over in crude? Well, crude on a 4-hour, we've flipped over earlier this week, and we've moved from a very very well confirmed downward trend into an upward trend here. It did pull back over the course of off trading hours, really in the course of yesterday as well. Pulled back, came down to this key level around around 52.60, 52.59, and it's repelled off of that. Trading with that 4-hour trend, we would still be looking at potential buying opportunities off of key levels. However, here earlier this morning, still on off trading hours, we did flip over. So just like with the E-minis here, our intraday 30-minute bias is short, which is contrary to our longer term bias. So again, same thing I mentioned earlier with the E-minis. If you don't like trading when the biases are against one another, if we've got one thing that says we're long on one time frame and we're short on another time frame, and you'd rather wait until those time frames are in unison and confirm with one another, then just wait. You don't have to be in a trade. Hard lesson to learn, but probably the best lesson you can ever learn is that you don't have to push the button. No one's forcing you. No one's got a gun to your head saying, you got to take a trade today. Wait for your trading rules. Develop some trading rules. Wait for those trading rules and be patient. Wait for that execution to occur in the right way. It's going to have a much better impact on your stress levels, on your account, on everything else if we can just be patient and wait. So, first things first, 30-minute is contrary right now to the longer term. If you don't like that, don't trade. Now, if we want to trade with the longer term trend until it changes, the longer term trend is still up, and it tells us that we should be looking for buy opportunities off of key levels. So pulls back to 52.60, 52.59, we could look to buy off of that level. Again, just be prepared to be wrong. Crude is a little more expensive to trade than the E-minis because it's got these wider moves. And with the wider moves, we're looking at quite a bit more money on potential risk, especially when we look at what the typical range is, per bar. You're looking at at least 25 cents or more during active trading hours, which can add up to quite a bit of money when you look at the value per tick on crude versus E-minis. So just, understand that if you're going to set a stop loss, it needs to be something that's, I shouldn't say if, when you set your stop loss, when you're looking at these key levels and we're trying to figure out how far against it do we want to let it go, it needs to be based on something. We can't just say 5 cents. It needs to be based on something that's realistic with how that instrument typically moves. So if we're looking at crude, and we're trading off of a 30-minute time frame, and we're looking to buy, which is with the long-term trend, which is contrary to the intraday trend. But if we were looking to buy off of this level, we would have to be prepared to let that move against us. And how the way we would determine that stop on any instrument, by the way, would be determined by how much this typically moves in any 30-minute period, and then use that as a stop point. That stop point might be too rich for the account size that you have if you have a smaller account. So just keep that in mind when you're trading crude or any other instrument for that matter. Your risk needs to be appropriate to the account that you're trading, and it also needs to be appropriate to the typical ranges of that instrument that you're trading. Moving over to gold real quickly. Gold is in a solid upward trend, pushing to highs that we haven't seen in years. 7 years now. We haven't been this high. Gold is certainly pushing up. Which is strange to see gold rallying like this when we've got the other markets rallying to all-time highs as well. It's telling us that folks aren't fully buying into these highs that we're seeing right now in the Nasdaq and the Dow and the S&P, right? So, but gold is continuing to rally. So the plan here, trading with that trend, would be to look if we do get pullbacks to buy on any pullbacks. But right now, it hasn't pulled back to a level that gives us an opportunity to do anything yet. So we're for gold, I'm not in a trade. We're just kind of hanging out and watching this thing continue to run right now. I have physical gold, but I don't have any trades on right now because whatever. I just don't. I don't. So whatever that is, what it is. So all right, popping over to the Forex market. Let's have a look over here. Watching what's been happening this morning. We've had a really strong pound leading the way again, and a lot of our pound currencies that we would typically be looking at. I don't know why that's all spotty. Why doesn't it have all of my currencies up? Anyway, I'll see what we can do. What if I bring this? Okay, well, let's just go through this real quickly. Looking at how currencies are moving coming into the U.S. session. Coming into the new session, we've got the pound, definitely the strongest currency as we enter the new session. The yen as the weakest currency coming into the new session. So looking at these, great divergence between the pound and the yen, that tells us, hey, this is the most active currency pairing. And going over to check that on a chart, would we want to enter a trade on this? Well, here's the thing. We've moved 116 pips for the day. Average over the last 5 days up to 30 days is anywhere from 100 to 104. So that's telling us, hey man, we've kind of hit the peak of what this typically moves. Does it mean it can't move more? No, absolutely not. It can move 200 pips, But what's the likelihood of it? So this is telling me, hey, we've exceeded our range coming into this market. Not something I'm interested in getting into. So just like yesterday, coming into the U.S. session, a lot of the currencies that we might consider trading have already hit what their typical range is. But just looking across the board here, and I wish I could bring all of this up. I don't know why it's not showing me everything. Well, maybe it's just delayed. Looking across the board here, if you guys can see all of these, most of the currencies that we're watching have moved to or exceeded their typical ranges. The only ones that really look like there might be some inkling of opportunity, looking at the pound versus the euro here, we've moved 37 pips for the day. Average is about 55 to 60. Could we get a 20 pip move out of it if it breaks through here? Potentially. It's not as active though. We're coming into the U.S. session, so pound and the euro, while they are certainly being still being traded, they're not going to be as active as some other currencies may be. So what's the likelihood of that continuing and moving more? I don't think there's as much opportunity. CAD Swiss has moved 30 pips on an average of 37. Again, no real opportunity there. It's typically a very small range anyway, with a higher cost of getting in, so it's not a great pair to trade anyway. There's really nothing, as I look across here, I just don't really see anything that stands out to me as a great tradable opportunity, as something that says, hey, even if we got divergence here, based on what its average typically is and where it's been so far, is there real opportunity for it to move? So for currencies, I'm just kind of taking a back seat right now and not doing anything with that at all. So again, we had trades earlier this week, yesterday, today. There's not a trade that we're currently in, so we're going to leave that one on its own. Popping over to have a look at the crypto. We always talk about Bitcoin and Ethereum, so real quickly on these, Bitcoin and Ethereum both had a pretty big pullback the other day, and kind of hit some bottoms. We were talking about this 250 on Ethereum. It's bounced off of that a couple of times, and it's pulled back up a little bit. We are still in an upward trend on Ethereum, so we could still be looking for potential long opportunities here. Depending on where you want to be, I mean, the 250 certainly is great for a low. 270 here as a high. So if you're looking for breakouts, we could certainly look to buy if it breaks through this 270 area and play that as a breakout long. That'd be a potential opportunity. And maybe from a short level, if it breaks through 250 on the low side, look for that to pull back down. But we are still on an upward trend, so that the tradable ideas, if you're trading with the trend, would be to look for buying opportunities. That's either buying on a pullback or waiting for a breakout of a key level and then buying on that breakout. Bitcoin, the pullback was a little more severe. It put us yesterday where we mentioned that we had crossed over here with our moving averages. I just, to confirm trends, I use moving averages on a higher time frame, which allows me to see what the trend currently is for that. We've crossed back now with this little bit of a movement back up. It's barely, but it's kind of in this buy zone again. Really tough. It's when you get in this kind of a mixed area like this, when trends might be rolling over, is where it gets tough. So kind of the same process. What you might be watching for here is watching for breakouts, just being patient. Again, there's that word, patience. Easier said than done. But just be patient and wait and see if we get a break of key levels. So 9,800 key level. Wait, see if we get a break of 98. If we break above 98, that'll be trading back with this longer term trend. And even right now, where we've crossed here a little bit, that would be telling us, hey, especially if we close above 98, great opportunity to buy that breakout and let it continue up. And then looking at a bottom edge down here, if we break below 96, look for sellable opportunities there. But the key is just being patient. There's some ideas of what you can trade. This is certainly a little more mixed than Ethereum is. And Ethereum, our altcoins might be leading us here. So if Ethereum really takes off, that might pull Bitcoin with it. There's a lot of good stuff coming in the markets for cryptocurrencies. You've got Ethereum 2.0 is coming out soon, and we've also got the halving event of Bitcoin, here in about month and a half, 2 months, two and a half months. So those things are coming up, which could certainly add a lot to the market potential here for both of these, and really all the coins. As we see an altcoin start moving, that might be what drives Bitcoin, or if Bitcoin starts moving, it usually pulls up the other currencies as well. So we'll see where that goes. I haven't looked at Crystal. Let's see, we as Bitcoin pulled back, we had seen Crystal drawing down. This is the automated bot that my friend has that I'm beta testing for him. Okay, so now it's off of that pullback, it started adding positions and actually has pulled us back up. So again, I've been impressed with the automated trading that this does. It's when it gets into drawdown positions, it's capping those losses, and it's reallocating and continuing to put us in a position where it's staying on track with what it's been doing since he's been testing it. I've been in it for, I guess, 2 months and 20 days now. So it's certainly doing what it should be doing. Again, this is something I'm a beta tester on. It's not available. It won't be called this when it comes out, but I will let you know when it's ready, and we'll keep you in mind when it's something that's available to the public. And I'll keep talking about it here and show you how things are going. The Neurotech Trader, which is the neural network that I've been talking about that my buddy has from down in Austin, been doing this. It's doing very well. Pound yen. Coming into this morning, it's been in a long since yesterday. I got stopped out of this one. I was in this trade, in this pound yen trade over here. We can see the buy. Actually, yesterday is where it signaled me in, and it didn't mind this pullback. This pullback stopped me out. So so I was in from here. It had a sell signal. It closed it out. Had a sell signal. It reversed it. Had a buy signal. From my buy signal, it was in, but again, pulled back here. It hit my stop and took me out right around here, and then it's moved on. For the actual trader, it would have taken it out and then bought again overnight, which I'm not in to see that rebuying, that reallocation. On the pound CAD, it was in a buy on this one as well, and the pound CAD I was in, so it had a sell signal that reversed and a buy signal. I was in this buy signal, and it was ratcheting up. I had a stop loss, or not a stop loss, a take profit point up here, which it hit and took profit on. This trade is actually still on as well from the Neurotech Trader itself, so it's still holding that coming into the new hour. So it's again, same thing. It's doing exactly what it should be doing. It's mapping the market, looking at the market, consolidating, looking for patterns, and then generating a plan based on historical data as to what we could potentially be seeing. It operates very much like a human brain, and I do have a presentation on that we'll be getting out probably over the weekend. Just trying to iron out a couple of things with Kostya, and we'll roll from there. So anyway, that's the neural network and what that's doing. You'll see more and more of that, especially as we get it developed for the futures market, because I really am interested in moving more to some automated processes that take the human emotion out of it. And I've never been a fan of it. You guys know that. Those that have known me for years, I have not been a fan of automated trading. I'm slowly coming over to the dark side, if you want to call it that. It's changed so much. Machine learning has changed, and primitive EAs, robots, were just very simple statements of, I've got a system that says if it breaks this level, I want to buy it. I've got a system that says if it hits, this outer band on a Bollinger Band and reverses over this many time frames, and I want to do this. They were very linear. Neural networks and current machine learning, current technology allows us to do much more than that. Allows networks to think like brains, and as a result, you get more of that human element in there. I think it still has to be managed. You still have to have good money management with them. There's no way not to. You've got to have that. And you've still got to have the trading psychology behind it to understand that probabilities don't equal certainties, which is the same thing we struggle with in any market, with any system. The good thing about it is it takes that bias away. It can't. It doesn't listen to the news and go, well, so-and-so did this, so I think it should do this, and it's not doing that, but it should be. Why isn't it doing that? It doesn't have those conversations in its head. It just looks at the data. Just like we were talking about earlier when we were looking at the futures market, right? It just looks at the data and makes a decision. So I'm really digging it. I'm digging how these things are working. I've been really impressed with what I've seen over the years, last couple of years, really, in the crypto markets, with these really innovative guys coming up with tools that are so advanced compared to what EAs and robots had been in the past, which is what always turned me off to them. Really impressed with where technology has taken us, and that's allowing me to be more open to automated systems. Again, an automated system doesn't mean you're going to win every trade. A neural network, thinking, looking at the market, analyzing the market, classifying, and then looking for similarities and anomalies, and then spitting out a model, back testing a model, and then future forecasting. All of those things, it's amazing. It's just doing what the brain does. But again, it's giving you a forecast. It doesn't mean every trade's going to be a winner. It doesn't mean that you're suddenly going to have this magical box that you just click a button and you make millions of dollars. It still has to be managed, but it's a really, really cool process, and I'm really excited about it. So I'll keep sharing those with you as well as I get into using these more and more. As we have been, as I find new things, I share it. It is what it is. All right. So anyway, that's all for now. Dang it, 26 minutes. Where's 15? I don't know how do people do these things in 15 minutes? I guess they don't talk as much as I do. So that's it for now. We'll talk to you guys later. Have a great day. Obviously, if you have questions, hit me up. Hit me on Facebook or just send me an email. I know a lot of you guys do send me emails. I've responded to a few over the last couple of days, as a matter of fact. Shoot me an email. I'm here to help. That's my goal, is to hopefully help you guys continue forward, find some sanity in the marketplace, realize that simple strategies can work and do work as long as we apply them. That's the big thing, as long as we actually apply them. So